What's up, folks? Let's see. Gotta double check if the audio is working. Okay, audio should be fine. Okay. Let's go. Okay, so welcome, guys, to today's live stream. It's Monday, no news Monday, and yeah, let's start off with the weekly trade analysis. Just a brief analysis on the higher time frames to determine our bias. So, as outlined last week, when last week started, our bias was bullish to fill in this weekly volume imbalance here, which we did. Okay, we closed on top of this. So, yeah, I guess we even closed above the weekly volume imbalance. So, next target on the weekly should be the previous all-time highs. On the daily, we have this weekly volume imbalance, and yeah, also close above. And now we have to monitor this daily premium wick and how we trade inside of these quadrant levels. And we also have this daily fair value gap, okay, that we are most likely going to trade into. That's a bias, that's a draw for today's session. So yeah, we also have a premium gap, so this also shows strength. So bias definitely bullish, draws this daily fair value gap. So yeah, let's start off with the intraday analysis. So on the 1 hour, what can we see? Okay, we have this clear new day, or no, new week opening gap. Sorry, that's a new week opening gap. Wait, let's delete all this. Okay, so we have new week opening gap, traded up into this premium wick. We traded up into the midpoint, got rejected. We have lows right here, fair value gap, and this new week opening gap. So new week opening gap, if you don't see any bodies laying on top of the new week opening gap. So what I mean by that, you can obviously see that we only were able to wick lower, but only 1 hour. This is still an inefficiency that is not efficiently delivered yet. So this could act as a strong draw. We also have these relatively equal lows, but as we know, we also have the daily fair value gap above us, okay? So yeah, we have to kind of see what price is going to give us. I have to wait for more information. High time frame bias is definitely bullish, so we want to see some kind of sell side getting manipulated, and then look for market structure shift to the upside. So yeah, that's actually the plan for today. That's a game plan. And yeah, let's go down into the 15 minutes, and maybe let's delete this one. Turn on the sessions and the session indicator. So yeah, pre-markets started. Okay, let's drop even down into the 5-minute chart. Yeah, between London and pre-market, we already swept London lows. Pre-markets engineered relatively equal lows here, so definitely want to mark that out and annotate the relatively equal lows. It's always good to new week opening gap. It's always good or not good. It's always required, and yeah, necessary to annotate all the important liquidity pools that are most likely going to be used during the New York Open session. So I always annotate pre-market low and high, which is from 7 to 9, as much as 7 to 9:30. Those liquidity pools are very important. So we have buy sides or buy sides and sell sides. Not only do you want to use pre-market liquidity pools and London or Asia highs and lows. Okay, London doesn't matter. We also swept low and London high, so that's not too important. Asia low, I don't think that's important for today's session. As I told you, high time frame bias is bullish, so maybe we can take up this high right here. But yeah, we can turn these indicators off. So simple, buy side, sell side, obvious draws. Then we go to the regular trading hours, which shows you only the yesterday's 4:14 p.m. close to the 9:30 opening. Okay, so we have an opening range gap when New York opened. So right now price is trading around here. So if we open up here, that's the opening range gap. Okay, so we have the 4:14 p.m. close from yesterday, or today's Monday, so from last week's Friday 4:14 p.m. close, and today's 9:30 opening. Okay, so you always want to be aware of the regular trading hour chart. Okay, so on the regular trading hours we have these relatively equal lows right here, but since our bias is in fact bullish, high time frame bias is bullish, we don't require price to trade all the way back down. Okay, if we do this, we could still trade to the upside, but we are trading around here. Okay, if you go back to electronic trading hours, we trade around here. Okay, we don't want price to go back all the way back down to sweep this sell side liquidity in order for price to go up then. Okay, so when we are bullish, this sell side liquidity, these relatively equal lows, would be enough as a manipulation to then have a shift to the buy side. Okay, so yeah, we can actually delete this one, and hello. Okay, so yeah, that's about it. So game plan, opening range gap. So New York Open is in 5 minutes, so we want price to open somewhere in between these highs and lows. Then we want to see sell sides, liquidity taken, and then shift to the buy side. That's bias. Draw is this high, and the daily fair value gap, that's right above this high. So yes. Hello, hello, hello. Guys, can you hear me? Um, what's up? Guys, can you hear me? I don't know. TikTok just sent me like a warning that the audio is not working. I don't know. Can you hear me? Two hand MTB. Can you hear me? No, audio should be working. YouTube live stream is working. I don't know if TikTok live stream. Paul, can you hear me? Okay. I don't know. I guess it should work. Um. Hello. 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 Bro. Um. No, I should be fine actually. So yeah, YouTube's working. Okay. Let's see. Let's see. Let's see. So let's drop down into the 1 minute chart. Okay, engineered buy side, we have this high, these relatively equal highs. A lot of sell side here, here, and here. I think that's a major draw for sell side. So yeah. Just wait and see what price is going to give us. Okay, so we actually want 930 to open between these liquidity pools. So I would prefer that, because if you look at it as like from the perspective of power of 3, okay, if 930 opens, you have manipulation, and then you have your displacement or expansion. Okay, so yeah. 928. Okay. 930 open. What's up, folks? Okay, so we actually have three options. Price is either going to take buy side, trap retail traders long, then take sell side, or take retail traders sell stops, and then go higher. So we have high, manipulation lower, and then the remove. That's option number one. Option number two, yeah, would be 930 open, manipulation higher. But yeah, doesn't look like option one is going to come to fruition. Okay, we now took buy side, breakout, retail traders go long. So yeah, let's see. Option number three, we could just explode to the upside and deliver our daily fair value gap draw, which isn't annotated right now, but yeah, buy sides is definitely target for today's New York session. So let's see. Looks like we got some crazy volatility, bro. That's huge. Bro, just compare the size of the candles. That's a fucking 1 minute candle, and it's 50 points. That's crazy. What's up, guys? Okay, so I would like to see sell sides to get sweeps. Regular trading hours. That's the opening range gap that I've been talking about. So we want to annotate this gap. We can delete the new week opening gap for now. Opening range gap. Okay. Maybe we put this to the left like this. Oh no, sell side. Okay. No. To the middle. And put on a fib. You always want to see the quadrant levels. Okay, perfect. Yeah, bro, come on. I hope it's not another session where we just take off and go directly into our target and deliver our buys. Yeah, those days it's kind of difficult because you don't want to be the one who's chasing price, okay? And if price just takes off without any retracement, I don't want to go long like that far in a premium. So yeah, we'll see what price is doing. Opening range gap. Let's see. Okay. First percent fair value gap hasn't formed yet. Let's see what is ES and Dow doing. So ES didn't take out buy side. ES directly went to the sell side liquidity pool. Dow kind of did the same. So if you look at S&P 500 micro MES Z 2025, as you can see, we have pre-market sell side liquidity and buy side. NQ took out the high, took out buy side. ES failed to take out buy side, went straight to sell side, and oops, and Dow kind of looks similar to ES. So yeah. Let's see. Oh, Alka, what's up? How are you? How are you doing? Guys, I'm also live on YouTube, so we actually have a better view on YouTube than on TikTok. So if you want, okay. Yeah, nothing too crazy right now. Sell side still intact. Yes, and Dow raging lower. Bro, come on. Come on, boy. Hmm. Interesting. That's price action. I don't know. Yeah, it's no news Monday, so what do you expect? Hmm. We don't have any crazy news data reports this week, so no FOMC, NFP, or CPI or whatever. So yeah. Hmm. Okay. Yes, and Dow still moving lower. NQ is kinda staying in the same range. So opening range gap still not traded to. So opening range gap, consequent encroachment, which means the midpoint is always like a 70% likelihood that price is going to trade down into it by 10 a.m. So looks like it's going to be delivered today, but there's no entry or buys. Um, yeah, no trade opportunity that we could take. No fair value gap. First percent fair value gap hasn't formed yet, so looks like manipulation. Maybe we see some movement now. Okay. Okay. Obvious sell side liquidity. Hmm. 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 Boring New York Open. Definitely want to see sell side get taken. So Mm, yeah, NQ is hesitating to go lower, whereas ES and Dow kind of move together lower. So maybe we can see market structure shifts on ES and Dow if we see this, and NQ still not taking sell side. That would mean that NQ is definitely the stronger, the leading average, leading indice in comparison to ES and Dow. But yeah, no market structure shift on the upside for now on ES and Dow. And NQ still hasn't taken out the sell side liquidity yet. So yeah, first percent fair value gap still hasn't formed yet. Yeah, just stay patient. Okay, bro. There's some crazy manipulation. Seems like we see a market structure shift on MES and Dow. Let's see, let's see. Bro, that's a fucking ugly ass open. So generally, if the first 30 minutes of the 9:30 opening, the first opening range from 9:30 to 10 a.m. looks like this, and we haven't seen the first percent fair value gap yet, and all this sloppy price action, yeah, you definitely want to wait and be patient and wait for the 10 to 11 a.m. silver bullet time window. That's the plan. Huh. Yeah, you gotta imagine every breakout retail trader went long here, okay? Daily, absolutely bullish. Weekly chart, bullish. Daily, bullish. Intraday chart, 1 hour, also bullish. So 9:30 opening, volatility influx, because the New York Stock Exchange obviously opens at 9:30, and you obviously see the volatility that comes with it. So also had a premium opening range gap. We had a premium new week opening range gap. So everybody went long here, okay? All of these people, all of the traders that went long when price broke out of this range, okay, here, they went long, so they trailed their stop loss either below this low or these lows, because these lows look like support, okay? That's a safe support zone for retail trader. So that's definitely something that the algorithm is going to refer to, and most likely going to take out, okay? So yeah, retail trader, I think they are safe, okay? Why? Support zone, tested once, supported, tested twice, supported, okay? So yeah, I wouldn't take a long if this sell side remains intact. So yeah, Dow actually shifted to the upside. We see a market structure shift on Dow. So MYM Z2025 had a market structure shift to the upside. Okay, Dow looks much more like clean, not too sloppy like NQ. MES, yeah, doesn't look too good. Dow looks clean. NQ still doing whatever. So let's see. Looks like we take our SASA liquidity now. Come on. There you go. Okay. Sell side taken. Now we want to see a market structure shift. Still, maybe we should mark out this new week opening gap that I told you might be the draw also on the downside for NQ. So new week opening gap. Took our sell side, traded all the way back down into it. If we are bullish, I actually don't want price to go lower than the new week opening gap. So it should close inside of the new week opening gap, at least on a 5-minute or 15-minute. Yeah, that's the reaction we want to see. If we look from the perspective of regular trading hours, we traded all the way back down into the open range gap low, close above it, inside of the new week opening gap. Took out this sell side liquidity pool. That's definitely enough. Also, electronic trading hours, sell side liquidity pool. So, yeah. Do we get a shift in market structure to the upside? Maybe. Maybe. So, first presented fair value gap. Yeah, this would actually be the first presented fair value gap. It's a little bit too small, so I think this one is better. And the algos definitely going to use this one. As you can see, fair value gap low also traded through, so that's first percent fair value gap. And we want to see price use it as an inverse fair value gap, so trade above it, close above it, and then using it as like a support zone to go higher. Okay, this is nothing we want to see. We want bullish prices, so high time frame bias is bullish. So yeah, trapped retail trader long, stopped them out, took out sell stops. Okay, yeah, I guess now we would be ready to see some high prices. If we don't and price stays below the first percent fair value gap, this is rather bearish. So we definitely want price to close above the first percent fair value gap here and use it as an inverse fair value gap. Okay, that's the plan. Dow moving higher, ES moving lower, NQ kind of staying in the range for now. So yeah, nothing tradable now. So just stay patient and wait, guys. That's actually my plan. Of course, you're welcome to do everything you want to do. But yeah, that's my game plan for today. Definitely looking for higher prices, okay? You see how price is respecting the new week opening gap here? Wick lower, was not able to close below it, so that's strength. Traded back down into it, went all the back up higher, closed here. So now we want to see this first percent fair value gap to be used as an inverse fair value gap. Okay, okay. Let's see. Oh, what's up, bro? No school today? Okay. So the first percent of fair value gap holds price lower. In order for me to take it long, we definitely want to see this act as an inverse fair value gap, okay? Yeah. Dow definitely moving higher, so on Dow we already have the market structure shift. ES is still also hesitating, similar to NQ, to Nasdaq. So do we get the first percent fair value gap and use it as an inverse fair value gap? That's a question. Bro, I thought today is No News Monday, isn't it? Monday. Yeah, we have no news Monday, so I guess that's the reason for the price action we have now. At least Forex Factory. We don't expect any high impact news. Yeah, Australian US dollar, nothing we want to. Yeah, bro. So Timo is also always writing in German, but bro, I think the majority of the viewers are definitely English speaking people. So um Bro, Dennis, can you maybe check TikTok if the audio is working there? Because I had like a warning from TikTok, some problems with the audio, but actually TikTok audio should be working, so I don't know. You can maybe check it. Ah, okay. No problem, bro. Have fun. TikTok live stream. Can you check can you check if the audio is working on TikTok? Should be fine, but yeah. Okay, still price is trading between first percent fair value gap and new week opening gap, so yeah. Bro, Dow is not isn't hesitating at all, bro. Dow is just moving to the upside. I don't know why S&P and NQ is hesitating. What's up? Okay, perfect. Thank you, bro. Have fun in school. Have you bought the iPad? Okay, price is using the opening range gap, lower quadrant here. Okay, so yeah, new weekly opening gap still holds price higher. Yeah, looks rather bearish to me right now. As I told you, as long as price stays below the first percent fair value gap, I don't want to look for any longs. So yeah, we could see a move down into these lows right here. We have relatively equal lows. That would be the draw for the downsides. As I told you, high time frame buys is bullish, so I would prefer high prices, and I am rather looking for longs instead of shorts. But yeah, definitely possible that we trade down into these lows as long as price stays below the first percent fair value gap. If we even close below the new week opening gap and below the new week opening range gap, yeah, then you rather should be looking for shorts. Yeah, Dow still moving higher, NQ and ES kind of stair stepping lower, so yeah, still waiting for high prices. We want this first percent fair value gap to be used as an inverse fair value gap. Already took sell side here on electronic trading hours. Okay, let's go back. Oh, okay. Took sell side here, went down into new week opening gap, got supported twice now. Okay, once, twice. Okay. Yeah, let's see if the new week opening gap here holds up price higher or lower. Let's see, let's see, let's see. Okay, we use opening range gap low. Let's delete this Sasa liquidity pool. Okay, so maybe do like this and this. So perfect. Yeah. Now, if my bias wasn't bullish, my higher time frame bias, if my higher time frame bias wasn't bullish but bearish, I still would not have taken a short setup. Of course, we are below the first percent fair value gap. But yeah, that's wouldn't be enough for me because we still have the new week opening gap that price could use as a discount array to repel higher from. So if I want to go short, I would only go short below the new week opening gap. Okay, this is still also ugly price action, so there's no fair value gap that I would enter short on. Yeah, we have an order block, but I don't know, that's not a high probability order block to me. So yeah, as I told you guys, we rather look for longs. And there you go, we have a market structure shift now. We want price to close above the first percent fair value gap. That's definitely something I want to see. Use it as an inverse fair value gap. Then we have this entire order block. We have new first percent fair value gap. So yeah, definitely we may see a good long opportunity soon. So yeah, let's see. Okay, I guess we don't have a unicorn setup. We just wicked higher, but price wasn't able to close strong. So no fair value gap, unicorn fair value gap here for now. Yeah. Come on, close above it. We definitely want to see close above it. Bro, S&P 500 price actions is even uglier than Nasdaq's price action. So yeah, nothing tradable yet. Price still working inside of the first percent fair value gap. I mean, we use the opening range gap low beautifully, respect new week opening gap. So yeah, definitely could see a long setup soon. Bro, I just want price to close above it. Come on, boy. Also inside of 950 to 1010 macro. So yeah, if price wants to move, I guess it would move now inside of the macro. So bro, that's interesting. Price was not able price was not even able to close inside of the first percent fair value gap. Look where the bodies close, okay? That's not bullish to me. Look how the first percent fair value gap is holding price lower. That's the reason why I said I want price to close above the first percent fair value gap, okay? In order for me to go long, I want to see price close above it. If price doesn't do what I'm expecting it to do or what I want to see it to do, then I don't take short, bro. I don't have any reason to fear of missing out on a trade. Trades are forming all day long, so I only want like high probability setup, so nothing I want to go long from. Bro, That auto block would have been beautiful. Okay, Dow also moving lower now. Yes, doesn't show any kind of strength. Stair stepping lower. Bro, Enkidu does like whatever. Still ranging. Sloppy. But yeah. Hmm. Now we used this auto block open level. Of course, these 4 consecutive down close candles are an entire auto block, but the lowest bullish, the lowest down close candle in a bullish auto block, that's a bullish auto block, um, is the most sensitive. And as you can see, price reacted off of the open level of this auto block. So let's see how price let's see it. Let's see. Let's see. Okay. Do we get the close above? That's a question. Use the opening range gap lower quadrant. Auto block lower quadrant. Okay. Yes, not going higher. Dow also not going higher. Both of them are going lower. But NQ seems like, bro, NQ doesn't want to join the party. Okay. NQ want to see higher prices. Or not. Bro, come on. Come on. But that's the reason why I took this as the first percent Fair Value gap, okay? That's too small. That's also too small, okay? I saw price using it here. So that's the reason I took this one as the first percent Fair Value gap, okay? Come on. Oh boy, oh boy. Interesting. Boring ass open. Bro. Come on. Come on, come on. Okay. Yes. Yes, going lower. Bro, NQ, I know you. You don't want to go lower. You want to see high price. Come on. Come on. That's bullshit. Ugly ass price action. Come on. Bro, I bet you not. There's definitely somebody who's taking a trade right now, and I don't know why. Okay, Maybe you could have anticipated that first percent fair value gap to act as a bearish fair value gap to go short on, go short from here and target these lows. Yes, that could have been definitely an opportunity, but bro, I don't see lower prices on the high time frame. High time frame daily chart looks rather bullish to me. Yeah, we kind of failed twice now to trade up into this daily fair value gap. So we traded all the way higher, failed to take out this high, failed to go up in here. Now trading lower again. So we are kind of 50-50 now. I want to see higher prices. Price definitely showed a willingness to go higher last week. Monday wasn't able to trade back down into midpoint of this fair value gap suspension block. Okay, that I told you and predicted it beforehand when I was streaming on this Monday. So if you want to check that live stream out, go to my live stream playlist. Went all the way higher. Okay, closed on top of this weekly volume imbalance on Friday, even closed above. Okay, so that's actually bullish. We had a TJF. Thank God it's Friday. Last Friday we had a bullish up close week, and if we have a bullish up close week, we are likely to see kind of a retracement on Friday, which we had. So that's definitely something that's permissible, that we failed on Friday to get here. So we definitely have a draw for today. And I still want to see higher prices. But yeah, price doesn't want to go higher as of yet. So I don't know. Let's see. Still working between first percent fair value gap and new week opening gap. We have one viewer on TikTok. Thank you. I will definitely appreciate that. Bro, I only need like one guy or one girl I'm talking to. That's enough. If I can help you guys, that's all I want. Okay, so if you get better at reading price action and learn something from the stream, that's my target. If I can take a profitable trade, bro, I take this. I take it. Let's go. What's up, bro? Appreciate you here. Sterian. Are you trading ICT or did you just stumble upon me and just was curious? Okay. Price does not want close. Price doesn't want to close below the opening range gap. Okay. Wicking lower. Touch it here. Wick lower here. So just stumbled up, bro. Nice. What are you looking at? So do you mean the game plan for today? So my game plan for today was to see some kind of sell side liquidity pool to get taken. We had this sell side liquidity pool, so I wanted price to actually manipulate down and then trade up into the daily fair value gap, which is a draw or was a draw for me personally. But as you can see, bro, price just, I don't know, wants to go lower. So yeah, my bias definitely is bullish. So I don't want to look for short opportunities. And yeah, if we switch from electronic trading hours to regular trading hours, of course, yes, we have these relatively equal lows. There could be the draw on the downside, but yeah, I'm just looking for longs actually. What are you looking for, bro? Are you trading NQ? Are you trading ICT concepts, or are you more like, I don't know, like support and resistance type trader or whatever? I don't know. Bro, this kind of price action makes me mad, bro. I'm sitting here for an hour reading price action, which is fun, okay? I like it. That's the reason bro, I love this game, okay? I love trading. I definitely love trading. But sometimes, bro, come on. You just sit, you just sit in your chair like for hours and hours and do nothing. Come on, sounds fair. I don't really trade much, just have been learning and plan to start trading seriously next year. Bro, that's definitely a good plan. When I started trading, bro, just keep learning, just like get your input, okay? Look, watch videos. I would definitely recommend you to watch ICT's videos. So if you look up on YouTube the Inner Circle Trader, I can definitely recommend you ICT if you're interested in learning more about trading. So yeah, ICT is definitely goated. What's up, Ika? It's Ika. It's the only viewer we have on TikTok. Um. Okay. Did you hear what I said, Starion? Okay, bro, come on. Yeah, I definitely recommend you if you want to go and start trading seriously. Definitely check out ICT on YouTube. That's just my personal um, opinion. Thanks for for the shout. You've been trading for 2 years, right? How's profitability been? Okay, so I've been trading now for okay. I learned trading. I started trading. My whole trading journey started like 2 years ago. The first like 6 months I was trading or watching videos and learning support and resistance. And then I thought, bro, there has to be something to it, like more than support and resistance. It's not like support and resistance. I thought, maybe I could learn something that is like really the market, okay? Yeah, because yeah, of course I had some winning trades with support and resistance and some losing trades. So yeah, but I felt like there's something more to it. And then I was like just curious, and then I stumbled upon ICT on YouTube, bro, and he just, I don't know. I watched his content and I was like, bro, what have I, bro, what have I listened to? Like this, that's it, okay? So then after 6 months, I stumbled upon ICT. I just watched this entire content, bro. He has like, I don't know, like 700 videos. I don't know, like that was tough. I don't know. It took me for to watch all this content. It took me like 6 7 months. So yeah, 6 7 months. I just looked at the charts. Look what I've been learning from ICT, and Yeah. So that's a point where I was like, yeah, 1 year into trading, and that's when I started um to trade like demo, and I did like back testing a lot. So I just went back into the charts and looked at previous price action and see what happened. What can I see? How are fair value gaps working? How do you know which liquidity pool is the right one? What's the wrong one? When do you look for this and that? And yeah, then I started like 1 year into my trading journey. I started like a year and like 3 months into trading. I started with the demo account, and yeah, I started like with a 10K demo account, and yeah, for me, I never been like too much into drawdown or blue any account, because I'm like the type of trader who is like more hesitant to take a trade. Okay, I have no problems with over trading or like with any type of emotion, like problems with, yeah, over trading or over leveraging. So I never blew any accounts, but I'm still like, in the end of the month, I'm like zero, maybe 1% or 2% up. Sometimes I'm also like 5 or 6% up, but then on next month, I have some kind of drawdown, okay, and then I'm like plus minus zero again. So yeah, that's a journey I've been through so far. So um, yeah, slightly profitable, but nothing too much um, in terms of profits. Because yeah, my personal problem is like fear of getting into a trade, and I miss so many beautiful trades because I'm seeing my model. I'm I know my model is there, so I could just click the button and sell or buy because my model is there. But then I see it, I second guess it. I look at my criteria and my model criteria, my rules, and then I look at the chart again, and price already took off and I missed the trade. So yeah, that's a problem I've been wrestling with um, for my entire like trading journey. Yeah, I hope you appreciate it, guys. My honesty and my transparency. So as I told you, as long as price stays below the 1% fair value gap, we are likely to see lower prices. Went up once here, twice, a third time, and a fourth time. Wasn't able to close above it, and yeah, I guess price wants to go for these relatively equal lows here. Hmm. Yeah. Totally appreciate it, and yeah, definitely understand the fear and hesitation. Yeah, thank you, bro. It's difficult. Yeah, price trading is difficult. It demands time. You cannot expect be profitable in your first 6 months, maybe 1 to 2 years. You have to find yourself. You have to see why do you mess up. What are your character flaws? Okay, you have to know. You have to get to know yourself. The technicals, all the technical parts, learning all the fair value gaps, all the blocks, drawing liquidities, or whatever you're trading, you can learn that in like 6 months, bro. Definitely. But bro, trading is 90% psychology. And I know what I'm doing in trading, but sometimes my character flaws just, I don't know, they just come and you see your model, for example, but you miss a trade because you have fear of getting into a trade. Or sometimes you think you are seeing your model, you enter too early, and you get stopped out. Then you review it and you see, bro, damn, my model actually wasn't there. So you definitely have to to learn the discipline and stay patient and stuff like that. So yeah. So I actually don't know why YouTube has is not showing like the full screen and you have these black areas above and below, because last time I tested it with like the ultra wide screen and not a 1980x 1080p. Um, yeah, I don't know. Yeah, okay. Took out sell side liquidity. Um, maybe let's see what could be the draw for NQ on the downside. Of course, these relatively equal highs. We could we could see a market structure shift now to the upside. Yeah, we could see it. Could it could happen, but maybe go back to the 1 hour. Let's see. Um, Relatively equal lows here, but that's kind of too far away. So we have liquidity pool here. Maybe let's go into the 5 minute chart. All these lows here taken out now. Okay, this is taken out. This is still intact. Okay, price. Bro, I don't know where price wanting to go. If we want to see lower prices, so yeah, high time frame definitely bullish. Bias is bullish, but intraday doesn't look too bullish right now. We traded back down into the weekly volume imbalance. Okay. So for everybody who's watching now, definitely monitor the weekly volume imbalance. So you want to have this on your chart. Personally, I don't want to have too much on the chart when I'm streaming, because yeah, it could be overwhelming, and yeah, I would rather keep the chart clean and simple. Look, this is just too much. Okay, but for you guys, definitely monitor this weekly volume imbalance and put the gradient levels on it. So take the fib for weekly volume imbalance high to low and monitor the levels. Okay, so now took our sell side here. um so yeah, high prices, question mark. I really need to study for my exam, so we'll do that. Though I subscribed and will check your content later. Thank you, bro. Really appreciate it. To be honest, I also have exams in like 2 months. I'm studying at the university, so yeah, I got the exams in 2 months. Maybe you'd think like, well, bro, in 2 months, what are you studying now? What are you learning now for the exams, bro? Where I'm studying, we have like the whole entire year we have nothing, and in the end of the year, bro, we have all the exams at the end of the semester, bro. And yeah, usually I take like 2 months. That's a good time period to get all the stuff into your head. But yeah, definitely appreciate it. Look, um, thank you for subscribing, and yeah, maybe I hear from you again. And if you want, you could check out my free Discord channel. It's totally for free. I'm not selling anything. It's just like me and the other. I think we are now 39 members. I guess like 5, 6 are actively using it, and I post in the beginning of the week. I post my weekly analysis, what I think what press is going to do, and I post also daily, like kind of small brief analysis, um, trade analysis and bias, stuff like this. So if you want, definitely check it out if you want. So yeah, but have fun studying for your exams. Also, something I need to do or start now, but bro, I have I'm having more fun streaming, and bro, I just love trading, and just it's just I don't know, bro. Recently, I really have a good feeling, and I'm getting to know myself even more, and I started to see my like character traits that prevent me from proper profitability and keep me at break even. So yeah, I'm kind of at the stage where I just need a little bit more, and I'm there at the profitability stage, you know. So yeah, definitely content at being like break even. I'm not losing anything, you know. But yeah, I guess the goal we have all is just living from trading, and yeah. Okay, so we used this for value gap as an inverse for value gap. Um, I guess if you have conviction, and you have the balls to go along from here, definitely you can do that if that's your model, no problem. Bias is bullish. We took out sell side, so that's something you can argue to go long from. Could be working. It's not my model personally, um, but I definitely do know people who would have used this inverse fair value cap to go long from. Um, yeah. Hmm. 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 Let's see. Maybe when we inverse, or not inverse, when we trade above and close above that new week opening gap. Yeah, I think I prefer to wait for the 1050 macro. Um, Nothing to fear of missing out anything. So yeah, You could have used this one to go long from. It's not my model. We could still move lower. You could still move higher. So it's kind of 50-50 now. For me, it's not a high probability model or trade right now. So yeah, it's just my opinion. And my opinion only. So yeah, I don't want to to share like any financial advice, okay? I'm not like a financial trade advisor, I guess you call it that. So I'm just sharing my opinion with you guys, okay? That's it. You're welcome to do whatever you want to do. I'm not telling you anything, so I'm just sharing my opinion about price action, just for my safety. Um, yeah. So as soon as we close below the opening range gap, um, that was a sign that we are likely now to move lower. You have to look like opening range gaps kind of act like fair value gaps, because why? This is still just an inefficiency, and like I told you here with the first percent fair value gap, as long as price is below it, we want to see lower prices. As soon as price is able to close above it, we want to see higher prices. That's kind of like you also treat opening range gaps. Price was trading within the opening range gap, price closed below it, use the opening range gap lower quadrant, and then move lower. So um, as long as price was only wicking to the downsides outside of the opening range gap but closed inside of it, um, that's not telling you too much about higher or lower prices, okay? But obviously here respected first percent fair value gap fourth time, and then was able to close above below new weak opening gap and below opening range gap, and was not even able to close inside of first percent gap fair value gap, which is definitely um, a sign of weakness. But yeah, nothing I would go short from. Why? No fair value gap in here. We don't have like clear order block, in my opinion. And I also was just looking for higher prices. So I would rather risk money. That would have been like a demo, but I would rather risk money on a trade that would be in alignment with higher time frame buys, which is bullish right now, as I outlined beforehand. So yeah. Okay. Yeah, that's the reason why I wouldn't go long from here, okay? I told you in the beginning, if we want to go long, or if price wants to go long and draw into the high time frame daily fair value gap here, it actually would have been enough if we just manipulate these lows, okay? But we went to the downside, take out these lows, okay? Took out this low, took out this low, took out this low. So it's not looking too bullish for me right now, okay? So um, it's rather bearish, definitely. But yeah, it would be okay for me to adjust my bias. Of course, high time frame bias is bullish, but you could also frame an high probability trade setup trading against your high time frame bias, okay? So, but to frame it high probability short now, we definitely need like a drawn liquidity on downside, like a real drawn liquidity in terms of like liquidity, like sell side, or a draw could also be like a new week or new day opening gap. But yeah, I don't really see Okay, of course, this portion of last Friday's opening range gap is still inefficient. So last Friday's opening range gap was from here to here. Price was only able to trade down. That's the lowest point that traded down into the lowest point of the opening range gap. But this whole portion of the opening range gap from Friday is still not traded down into. So this could act as a draw on liquidity on the downside. Um, yeah, that's actually not too bad of a draw. That's actually reasonable. But that's actually also the only draw we have. If we go back on the 1 hour chart, okay, yeah, we have this low. Are we likely to go down this far? That's a question. I mean, hmm. Yeah, kind of ugly price action here and here. Difficult market structure. Yeah. We have maybe, let's see. Okay. Friday's lows was here, so we don't have like a previous day's low. So ICT recommends you to always have the liquidity pools of the last 3 days, okay? The last 3 days would be Friday, Thursday, and Wednesday, okay? When a liquidity pool is traded to and engaged with, you can still see price using it in the future, even though price already took a liquidity pool. So if you just extend this level, for example, this high from Wednesday, you can see price using it here, price using it here. So now maybe we can do it for a moment. Take Wednesday's high, use it here, use it here, use it here, here, also right now. So yeah, new week opening gap and new day opening gap. Okay, new week opening gap here, new day opening gap. Yeah, we have a multitude of new day opening gap, which is also like acts like a magnet for price. So yeah, let's turn it off. Go back to regular trading hours. Yeah, I guess that's a draw on the downside. This opening range gap portion that is still unfilled from Friday. Let's go back to the 1 minute. Price now trading inside of the inverse fair value gap. Let's see. Hmm. 10, 15, 4 minutes. Hmm. Okay. Let's see. Okay, we used 1% for value gap. Boom. We also used lower quadrant. That could be an order block. That's definitely an order block. Price traded down, up into it several times. No fair value gap here. Inverse fair value gap. Now, if we say that's a draw on the downside, which is last Friday's opening range gap portion that is unfilled, okay, then if we grade the price swing from the high to the low, if you would take a short setup here, targeting this a draw, we are too far in the discount, okay, and you don't want to sell in a discount. You always want to sell in a premium and buy in a discount, okay. So taking a short setup here down into here wouldn't make much sense in my eyes. So yeah, doesn't look like we see higher prices for now. Not an easy session. Lots of ugly price action, consolidation, sideways. Okay, that's the only move that could have been that was reasonable to take. But yeah, no entry mechanism for me to profit from. Yeah, I guess that's a session without taking a trade, which I'm fine with. I don't need to take a trade like every session, and you shouldn't want that either. Okay, so a lot of people have problems with over trading, and what would I recommend these people? These people, I would definitely advise them to write down on a piece of paper what they want to see in price action. For example, you write down, I want to see a liquidity pool taken. For example, if you are bullish, you want to see a liquidity pool, sell side liquidity pool taken. Then you want to see maybe market structure shifts, okay? And then you write down only one model to enter on. For example, you take a breaker to enter on, or you take inverse fair value gaps to enter on, okay? You should just break down like one model and put it on a piece of paper and just stay and submit to this to that model, okay. Don't try to use inverse fair value gaps, order blocks, breakers. Maybe sometimes you buy and turtle soup trades, for example, that's a low. You could have entered here. If you have a lot of conviction, you could have entered here as soon as price traded down below this low here. You could have entered and went long from here, okay? But this is like Champions League type of trading, okay? So you don't want to do stupid things like that and like this in the beginning, okay? Just stay and stick true to one model, write it down on a piece of paper, and just, if you're in front of the charts, look down at the piece of paper. Is every entry criteria or like market like criteria you require price to show or like should exist in the market? If everything is checked, then you enter a trade, and not like, oh, I think it could go long from here. We have a market structure shift and inverse already get yet. Okay, I take a long from here. Maybe if that's your model, okay, then just always do this. But in the beginning, just stick to one to one to one model. And yeah, I guess that's one like option you have, or one way to maybe prevent like over trading, I guess, and to forge discipline. Because I think like people who are wrestling with over trading, they need to be more disciplined and just, yeah, stick to one model. That's it. Maybe that doesn't like apply to all of the traders who are like having hard times with over trading, but I guess that could be a reasonable approach um, to fight against over trading and overcome over trading. So yeah, like I'm at the extreme opposite of over trading. I'm like the one who's like fearing to get into a trade, or was wrestling with having fear of getting into a trade. I'm still having sometimes problems with fear of getting into a trade, but not as much as in the beginning of my trading career. So um, yeah. Yes, sir. Hmm. 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 Yeah, I guess that's just a boring tape reading session, which um, you should be fine with that. Okay, don't force a trade. Don't try to see something in the charts that actually is not existing right now. Okay, so hmm. I mean, yeah, that could have been an opportunity to go short from. We have a fair value gap inside of this inverse fair value gap. We are inside the macro. We have a drawn liquidity on the downside. Yeah, the reason for me like not to take a short is just because I think we are just too far in a discount, as I told you before. So yeah, I don't know. If I if I had like a clear drawn liquidity on the downside, this is just, yeah, that's a draw, but I would rather want to see like, of course, also like having a new week opening gap or maybe relatively equal lows. We also we just already have taken out too many sell side liquidity pools. So yeah, delivered, not my model. So I'm definitely nuts. Um, I don't know. Oh my god, I missed this trade. No, I don't care. So we have two reasonable short setups. One here, close below opening range gap. Use upper quadrant. Okay, order block. Could have gone. You could have gone short from here. That would have been reasonable from my point of view. Okay, not my model, but this is something where I would say like, okay, yeah, I get you. Valid trade. This long, as I told you beforehand. I don't know. I don't know. Price just took too many Sasa liquidity pools, which is actually that's a mistake I did in the beginning of my trading career. Okay, I thought, okay, we took one liquidity pool here on electronic trading hours. We took multiple Sasa liquidity pools, and we took now this these relatively equal lows. Now price has to go to the upside. No, that's just making your bias. And maybe you should just view it from the other way around. Like, okay, maybe we took so many Sasa liquidity pools. Maybe we are not bullish. We are actually bearish. And yeah, bro, I can't tell you how many trades I've lost because I've done this and entered like at this inverse fair value gap. And that's the reason I just learned from it, and that's the reason I didn't take it as SQ. And as you can see, I would have been stopped out. I would have been stopped out. So that's definitely progress, guys. You have to see where you've fucked up like in the past, and not like avoiding these losses, bro. It's just so like significant. Like it's just so meaningful and like valuable for you. Okay, so you definitely have to cheer and like celebrate that you avoid, bro, avoid losing. If you avoid losing, if you keep your losses at a minimal, and maybe you can like, how do you say, like expand your profits. Expand, yeah, maybe it's not the right word, but if you can avoid losing and maybe slightly, like maybe have one win or two wins more than you on average have, because you are avoiding these unnecessary losses, bro, that's a huge win. Okay, definitely. So yeah, avoid losing is a huge skill in trading. Okay, so knowing when not to trade and when to sit still and do nothing, bro, that's actually the best skill you can have. Okay, yeah, but definitely learn from my mistakes of the past. That's why I was looking at a drawn liquidity on the downside, even though my bias is bullish. And yeah, that's the only draw I could see on the downside, which delivered. Um, yeah, maybe. Let's see. Fair value gap. Stop loss above first candle's high. low-hanging fruit. Yeah, that could have been enough. If you caught this trade, bro, done for the day. For me to take these trades against my bias is something I need to get used to. I'm already avoiding these losses and learning from my mistakes of the past. And the next step for me personally now is to abandon my bias. High time frame bias is bullish, but yeah, it could, as you can see, high time frame bias is bullish, but you can have like an entire session, an entire New York session that's bearish. Okay, that can happen. Okay, maybe you see now a lunch macro and PM session, then go to the upside. Possible. Okay, not saying we definitely go to the upside. I outlined in the beginning what I want to see in order for to look for higher prices. But yeah, next step for me is just to then also profit off of these trades. Step one is not going long from here, seeing that we are rather in a bearish market and avoid losses here. That's something it just takes time for you to see it and realize that that's not the call, that's not the long you want to go long, like the opportunity you want to go long from. Okay, it takes time to see it and to realize it. Okay, step one, realize it. Perfect. Step two, avoiding it. Sit still, do nothing. That's step two. Step three is to profit on it. And guys, I don't tell you like these three steps you're going to achieve like in a span of time of maybe like a month. Okay, this takes time. Maybe for some of you it takes 6 months. Maybe some of you like need, I don't know, like a year to realize these types of things. Okay, because the market does not always obviously look the same. It's always slightly different, and you know, your emotions play a huge role in these things, because if you generally see price action, you always want to see something, some kind of liquidity to get taken. And this is just, oh, your mind subconsciously tells you, oh, we took our sell side liquidity pools a lot, and you want to go long, and bro, price is repelling higher beautifully. We have this huge bullish move, and you go, oh, okay, it looks just too bullish. I go bullish now. I go long. Yeah, but that's just reacting to price. Trading ICT concepts, bro, we don't react to price. At least, yeah, of course, in the beginning, maybe if you're new, you don't know your character flaws, and you have fear of messing up, fear of messing, fear of missing out. Okay, just journal your trades, and you will see if you have fear of messing out or if your analysis just was wrong. Yeah, next step, definitely to profit on these types of trades. I have one rule. I actually could have taken this trade, but yeah, my rule says if you usually should not sell in a discount. You should always sell at a premium or buy in a discount. When you buy in a premium and sell in a discount, I wrote down my rule which says only risk half, because these trades, as you can see, they can pan out. Okay, obviously this one scenario here was profitable. In my opinion, we are in a huge discount, but this short would have made you profitable for the day. Okay, so for me to maybe just like try, even though we are in a discount line and I want to short, I just say, okay, if you want to take this trade, just risk half, because it's not high probability, but it could go into your favor. Okay, so you either sit still or just take half of the risk. And this is what I could have been doing instead of not trading at all. But yeah, normally I would have taken 2 micros short, because we have a stop. We would have had a stop loss of 13 points, and 1 point is $2. So 1 micro, you would have had a stop loss of 13 points, which equals $25 risk in order to make 2.5 that amount. So you would have had a profit of, I don't know, 50, like $60, 65 or whatever, with 1 micro, with like half risk in my like case, with my like type of risk management. So yeah, I mean, $65 in 1, 2, 3, 4 minutes. So who doesn't want to make $65 in 4 minutes? I mean, I guess like what is like minimal wage? It's like, in Germany it's like $13, 13, yeah, okay, 13 euros per hour. So you would have needed to work like 5 hours, or 4 to 5 hours, in order to make the amount of money that you could have made here in 4 minutes. That's how you should see it. Okay, so that's crazy. Yeah, guys, we already have 11:10. Okay, New York session is over. Maybe like a little review. Yeah, 9:30 opening here. Manipulated to the buy side, took out pre-market high, and then we just stepped lower. Price first percent fair value gap, held up price lower. Okay, here, close below. First short opportunity here. Took our sell sides, tricked some people long on this inverse fair value gap. I can guarantee you almost that price, that people definitely, some people definitely lost money here, taking this inverse fair value gap as a long. They got stopped out here. Okay, that would have been the second trade opportunity. Yeah, didn't take a trade today. It's okay, we have no news Monday, so it's okay to just start off the week with just like getting a feel for price action. What is price was wanting to do? So for now, we have definitely a huge down closed candle on the daily chart. So yeah, we will see if we now see lower prices for the rest of the day and maybe tomorrow, or if we just retrace now and then go higher. We'll see. I don't know. Okay, beautifully drawn liquidity. Last Friday's opening range gap, unfilled portion, traded down. Okay, so yeah, that definitely was the drawn liquidity on downside. Used it perfectly here. Yeah, guys and girls, I hope you guys enjoyed it. And yeah, I would say I catch you in the next one. And good luck, good trading, and be safe.